Hello and welcome to another update video about Solana. Solana is currently moving up a little bit, friendly Saturday, but the move up looks very much choppy. So I have no reason in any way to change my scenario. In fact, it's actually following this orange wave count nicely. Let's talk about the microstructure on the Solana chart in this video. And we're talking about the, let's say, more bearish and more bullish scenarios. First of all, let's start again with the yellow count, which is at the moment only the alternative, but it is also a plausible scenario, but will become more probable with a break below initial support for the orange scenario. And this support area is going to end at 147.74. So the lower boundary line is that 78.6 retracement there in the orange support region. So if the yellow, or if the price in general breaks below that support region, I'm not going to follow the orange scenario, which allows for higher prices. I might still follow it, but only as the alternative. The preferred count would then be the yellow count, just because, you know, it will adhere more than the orange count to Elliott wave guidelines and principles. It's all about that, right? We have typically 2 to 3 scenarios. I'm observing many more in the background. Yeah, just because I show you 2 scenarios, it doesn't mean there are only 2, but we obviously need to keep it as simple as possible, as presentable as possible. But when one wave count starts to adhere more than the other one to a greater amount of Elliott wave guidelines, then this turns into the preferred scenario. That's how probabilities are, let's say, calculated as well. And to decide which one is the most probable one, well, really depends on how well does each wave count adhere to the Elliott wave guidelines. They all have to adhere to the rules, right? They all, you know, if there's a wave count that doesn't adhere to the rules, I mean, scrap it. But it's all about the guidelines and how many are being respected. And if a support level breaks, for example, well, then less guidelines are being respected, and that typically changes what's primary, what's alternative scenario. In the yellow scenario, we're dealing here with this WXY structure to the upside, where in the Y wave, the Y wave completed likely, WXY, and formed a B wave top. Okay, after an A wave decline finished in April, this here could be a B wave top, but I need evidence for that. That means now a C wave decline would be unfolding broadly into the region between $72 and $108. I'd say somewhere around $90 would be an ideal target, but we're still holding above support. And also because these WXY structures can never be preferred scenarios until there's additional evidence, this remains the alternative. But the price did reach the upside target range and reach the 100% extension, which was one of the key resistance levels mentioned, and it's just a key level for that B wave. But yeah, it takes a break below support to make it more probable, because there is another wave count that just based on the wave count itself seems more probable. And that's the orange scenario, in which we have an extended B wave. And in this scenario, we have an A wave, a B wave instead of WX. And this here is now in orange, a 5-wave move. 1, 2, A, B, C in wave 3, 4, 5. Wave 1 is also an ABC, and wave 5 as well. Just in the third wave, it seems to be an extended one. And to keep this idea alive, or at least probable, and to keep it the preferred scenario, the $147.74 level needs to hold. And then we can look at higher prices towards the $220 mark or higher. But first of all, let's see if we're holding support. And let's talk about the microstructure in this B wave pullback of wave 3 in the orange scenario. In this scenario, I showed you yesterday that we were likely dealing with an ABC structure in wave W, which completed. Then we had an X wave rally. And I said to you that this is likely already the Y wave down, in which we bottomed in an A wave. I think I made the video just where the low was struck. And I highlighted to you the resistance area. I don't need to change it because the price bottomed exactly there. The B wave resistance is between $171.64 and $177. So this is the key resistance area for this B wave. Any break above 177, if sustained, will indicate that possibly something more bullish is unfolding. And then another C wave down would likely follow. The price action that we see here, because it looks so choppy, certainly supports the idea that this could be a B wave. Please be aware that a break above resistance is not an invalidation point for the orange count. It would rather indicate that we've most likely already bottomed in all of wave B, which at the moment is impossible to say. The move up looks choppy, it looks corrective, it just looks like a B wave, and I would need some more evidence, like a breakout to the upside, specifically above 177, and then followed by a break above 181 to suggest that all of wave B, this pullback, finished. But here, subwave structure, wave B, they sometimes overshoot as well, so we shouldn't get too excited if resistance breaks. But it would start to, make it more likely that all of this B wave already bottomed. And for me, at the moment in this orange count, it's about, okay, maybe we go up more directly because it's already left the orange trend reversal area to the upside. But looking at the structure, to the downside, but also here now to the upside, it is more probable for me that we are forming this WXY structure complete, and there's one more low that could happen in wave C of Y of B, possibly targeting 155.56, I'd say. Depends a little bit on how high the B wave goes here. Then we can calculate a target for wave C of Y of B to the downside. Really depends on where that B wave lands. For example, what I can do is, based on the initial WXY structure, what is the wave W at? Then we go to the high of the X wave, and then we're getting a few additional Fibonacci extension levels to watch. For example, $159.50. It's the 100% extension. One of the key targets, 155, 152, and then 147. And all of these key targets, they end within the larger support region. Disregard the lower ones, they are too far out anyway. So normally a wave Y would finish in the region between the 100% and the 161.8% extension. So that's precisely the white, the relevant levels there on in the white Fibonacci extension zone. So that's what I'm watching for at the moment. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And also, if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.